Ladies and gentlemen, welcome back to TNP Finance, where we make long and short-term investing simple. Today we're going to take a look at the NASDAQ, at Bitcoin, and at a bunch of stocks, and hopefully I'll be able to give you some insight for the short and the long term, and you can place trades as soon as tomorrow. So taking a look at QQQ, we're going to hop straight into it. We were down 0.08% today. Taking a look at the heat map for the the S&P 500, we can see that a lot of our finance stocks and our health and technology did extremely well. Tech was very, very sketchy, aside from, well, tech and electronics were very sketchy, aside from AMD. Now let me find AMD in this bottom left corner. It was up 9% today, which is absolutely incredible. But right now, we are in a bit of a crossroads here. You have finance stocks and health and technology stocks that, for the most part, and I'm just going to generalize here, are in brand new all-time highs. Yet you have other stocks here that are in consumer durables, consumer non-durables, and you're looking at 52-week lows for some of these companies here. So the market breadth is extremely wide right now, and that's something that's not very sustainable. You can't see the market make higher highs and lower lows at the same time. Something's got to give, and as soon as we have a macroeconomic situation put into play, you're going to start to see these stocks that are rising up start to fall back down and kind of match the rest of the market that's falling with it. That breadth is very, very obvious when we take a look at securities such as XMAG. So XMAG over here, we can see that this is, so XMAG, let me just explain what this is. This is basically the S&P 500 excluding the Mag 7 stocks. So we can see here that we had a very strong rejection, a horrible rejection actually, right off of our resistance line and even higher. We swept a lot of liquidity from the top over here, and you're looking for a total drop of about 4%. That's not a very good look. Now, what is XMAG consisting of? Well, it's consisting of Broadcom, which did very well today, JP Morgan, which is doing well, all of finance is doing very well, Berkshire Hathaway, again, part of finance, is doing very well, Eli Lilly, again, health, doing well, Visa is consolidating, Netflix is a little bit low, but for the most part, most of these songs are pretty strong. Exxon is very high right now. And if we do take a look at these stocks all grouped together, we can see that all these stocks made a new higher high within the combination of those 10 stocks. So when I see XMAG over here, it's showing me that even the breadth of the market between the top stocks that are not even Mag 7 stocks are much higher than the rest of the other 490 stocks that make up the S&P 500. You have very extreme highs and very extreme lows, and that's something that's not really sustainable for the market. If we take a look at, if we try to separate the NASDAQ a little bit more, and we take a look at MAGS, which is an ETF for the Mag 7 stocks, we can start to see here that just like the QQQ index, it's looking very, very similar here. You're getting this rejection of this higher high over here, and where's my drawing tool at? You're getting a rejection of this higher high over here. I'm just going to use my line tool, and then you also have another potential lower low rejection here. So if we can't hold this rising support line here, just like how we have a rising support line for the NASDAQ, it's not looking too good. So I'm not going to say start shorting at that point. Maybe just take risk off and maybe just close some of your positions in your tech heavy stocks. But right now, if we do break below 600, I don't see any reason why the NASDAQ can't move all the way down to 540. Retest previous all-time highs, as the NASDAQ always does, like how we had earlier this year in 2025, when we retested 2020's all-time highs. And we are always in the mood for retesting highs within the NASDAQ, just like how we did over here, retesting this previous 2024 high. I see that as a pattern that's very significant within the NASDAQ, and close some of the gaps too. You have a lot of gaps that are sitting within the NASDAQ, and all you have to do is just search up this beautiful gap tool right in your technicals, and you can see all the levels that the price is going to have to eventually come down to start kind of refilling and rebalancing. So it doesn't have to fill all of the gaps. It's not a 100% chance, but it's very strong. I want to say like a 90% chance. So that being said, my odds are very strong that I can bet that this gap here at 618 to about 610 will get filled. That's very obvious. And then probably this gap here at 536 to 530 would also get filled as well. So that is my outlook for where we start to move if we don't get the bullish break up and we start to get that bearish breakdown. But right now, I want to see a nice fill of this upper gap over here and continue moving higher to about 640, 650 if you are a bull within the NASDAQ. We just need to make a new higher high. And again, there's nothing right now saying that we are not in a bull trend. We're still in a very strong bull trend, but we just need to see more confirmation before we do anything too rash. Let's take a look at Bitcoin over here. Now, speaking about a breakdown, I'm not liking the looks of Bitcoin whatsoever currently. you reach a level like 100,000, which is very significant. And if we can't hold that 100,000 level, I would see us coming all the way back to a very significant support level where we've seen in the past the market reject off of, such as 75,000, which is a previous all-time high and a previous retest and rejection. So if if Bitcoin can't hold this level over here, I could expect it to go that low. But why would I expect Bitcoin to start falling now? Because we are in a bull trend still, and it's been very, very strong in the past couple of years. Well, right now, what I can see here with Bitcoin, you have this head and shoulders here, and it's not looking too strong over here. You had a very nice retest, and you got this break line over here, this neckline of this head and shoulders here, that not only broke, it also got retested and strongly rejected from. So if we can't hold 100,000, and there's really no reason for us to break below 100,000 if we are in a bull trend, as when stocks come and retest these significant levels such as 75,000, they never have a candle that breaks below that. It always gets a very strong wick right off of it. Let's take a look at 50,000 as well. 50,000 is right over here. You have a retest of that and very strong buying force straight off of that. So if we can't hold 100,000 and we start to break below that, I'm going to say that taking a short position could be very possible. Beautifully, you do have this resistance line that is falling, which is also going to be great as a trailing stop loss and a trailing take profit as well, once you start to get more positive numbers if we start pushing down. But I don't see any reason why Bitcoin can't fall all the way down to 75,000. If we take a look at our previous high for Bitcoin and we measure down to 75,000, it is still a very considerable drop of 40%, but it's nothing like that we haven't seen in the past. I mean, just earlier in 2025, you can see that Bitcoin got this very strong rejection of about 32%. And just previously, we have seen in not too long ago, again, 2022, let's just take a look at 2022. We've seen drops of Bitcoin where we've fallen 77%. So don't say that just because we are in a bull trend, it's impossible for us to come lower. Right now, I think your best scenario, instead of just buying at a critical support level, I'm saying this is the critical support levels at 75,000, 50,000. These are good take profits, but they're not good buying zones. Wait for that momentum of sellers to die off, just like how you can see here when we start to consolidate, and then that's your entry right over here. Anywhere from about here within September 6th of 2022, all the way to about 15th of March, that's a lot of time for you to find a lot of consolidation with the market. These are all good buying zones, and you'll probably see something very, very similar with Bitcoin here. Again, my bias, is not a bullish one. It's a little bit bearish for 2026. I can't tell you though, no one's going to be able to tell you if it's going to be good or bad. But right now, just from the way that I see the market setting up, the way that I see macroeconomics playing out, where you have inflation that's higher than anticipated by 1%, you have rates that are getting cut when we aren't in a position to cut rates. Jerome Powell does not like cutting the rates currently. You also have unemployment that's doing very, very poorly. You have a lot of job openings, fewer job openings, and still you have unemployment. It's not looking too good for the macro environment, and there's only so much that these numbers and these stats can kind of stray away from the absolute rising beast that the NASDAQ is before we kind of get met at this crossroads, or we kind of get the straw that breaks the camel's back and all comes falling down. But when we do get that break below 600, that's going to be a very key sign, not just for the NASDAQ stocks, but for the entire stock market, that we're probably starting to trend a little bit lower. So that's great times for you to be holding cash and waiting for good buying opportunities, and not just buying for the sake of buying or because you're going to miss out. Let's take a look at a couple other stocks though. I want to talk about TSM over here. Taiwan Semiconductor. This has been one of the strongest stocks that I've been seeing the past couple of years here, especially for 2025. Taking a look back at the bottom of 2025, TSM has moved up a total of 128%. And right now, TSM is seeing a little bit of consolidation, just like how we saw it back in July and August and a little bit of September. But right now, TSM is in a bit of a crossroads, and this is very, very pivotal for TSM. If we can get above 307, that will probably indicate that we're probably coming up to about $330 for our next take profit when it comes to TSM. And if we can't hold that 307 level and we start to break below our rising support level, which has been very, very strong at boosting the market back up every time we get a touch, then I could see us come all the way back down to this purple zone over here, where we've gotten a lot of buying interest off of. So if we do break below, I want to say I think it's realistic that we could break below at around $280. We can be looking for a move all the way down to about $239 a share. That is my outlook for TSM. But this is still a very strong stock nevertheless, and I don't see it going under, or I don't really see you getting too fearful out of it, because again, I think it's going to stick around with us for a lot. There's really no other, semiconductor company that's really doing the numbers that TSM is. Let's switch over to some immediate buying opportunities. I want to talk about Pepsi, Intercontinental Exchange, and Berkshire Hathaway. Let's start off with Pepsi over here. Pepsi has been falling ever since 2023 here, and I don't really see a very strong reason as to why. So right now, when I see that we touched our very strong buying support level over here, that is sitting at about 128 currently, I don't see any reason why, just like how the past has indicated, that we continue moving higher for brand new all-time highs. This is one very strong support line that I've seen for within, like, I'm going to say the entire market. I haven't seen a trend line that really extends that far back, and that's been so critical in holding up a stock, unlike Pepsi. So right now, when I see a touch over there and we see some very strong buying opportunity, I don't see any reason why we can't come up to a new all-time high as Pepsi has in all of its years previous. So right now, Pepsi is currently trading, let's just see from our previous all-time high, at 26% lower, 26.35% lower than where we were before. I see right now, if you do buy, and we do move to a new all-time high, let's say it's nothing crazy, let's say it's 10% more than our previous 196 level, you're looking at 215, and we're moving all the way up to about 49 to 50% higher than where we currently are. I think that could be a very, very good trade for you. And again, this is a very safe stock. It pays a dividend. I don't see anything wrong with this. And you have a very direct risk level as this rising support level continues to move up over here. So if we ever do break below and you're starting to get a little bit cautious, of course, you can use that to close your position. But right now, I don't see any reason why you wouldn't want to buy Pepsi right now. Let's just take a look at Coke over here. Typically, Coke and Pepsi have a very strong correlation. And when we zoom in to 2025's performance, we can see here, and let's just zoom in, they follow very closely to each other. You have a high here, you have even like some of the moves lower here, we can see that we kind of continue with that trend over here, trend lower, and then also we have this big crevasse that we kind of just fall into in April, we recover in July, and then we have even some of these highs over here that mimic Coke. Pepsi mimics Coke a little bit, and then right over here we have this high, a little bit of a pullback, and Coke, specifically Coke Consolidated, has absolutely ripped up. This is one of the best stocks in my portfolio of 2025. And right now, Coke is at a brand new all-time high in the past couple days. And Pepsi has started to create this rounding bottom over here. We've gotten a rejection of sellers, and we're starting to see a lot more buyers come into the market. I don't see any reason why in the short term we can't come up to at least this neckline over here at 155. If you want to take a trade for Pepsi, you're looking at a very nice risk-reward ratio where you have your stop loss right underneath our swing low, you have your take profit right at this neckline over here at 155. I think that is a very conservative trade that's still going to give you 7% to the upside, 3.39 risk-reward ratio, and I think it's very possible that we can come and retest this previous resistance line that's been falling ever since 2023, as we haven't had a retest of this line in quite some time, ever since September or October of 2024. I think that could be very, very possible, and that's going to give you an even better risk-reward ratio of 5.7, nearly 6, with 12% upside. If we do break above this falling resistance level, which I think is extremely possible, because this is a stock, even if 2026 is not going to look good, this is still a very recession-proof stock. You're going to see Pepsi break above this resistance line and continue moving higher to previous or new all-time highs. So I'll be very excited for that to happen with Pepsi. Let's talk about another buying opportunity here, Intercontinental Exchange. This stock has been falling, it's fallen 25% from its top to its bottom. That to me is looking pretty, it's looking like a very good buy for me. Now, why do I say that? You could have had a very good reason for us to reject and retest right off of this previous low over here, where you could have done something like this, like that, and then continue moving down. However, I'm not really seeing that. This seems like a little bit of market manipulation, especially when we move down a number like 25%, pretty much on the dot. That is like a very clear sign that this isn't a flawed stock. This is just a very good buying opportunity and a very cheap price. ICE, or Intercontinental Exchange, has been trending up for the past few years here, and we can just see new all-time high after new all-time high, and I don't think that it's going to break that pattern whatsoever. We are at a very nice low point, so you know what, even if we do pull back a little bit more, that's still going to be a very good buying opportunity, and you're still getting in very cheap. Right now, if we do break above our falling resistance level, what I'm looking to do is place my trade, have my swing low again, or my stop loss right at the swing low, as I always typically do, and I have my take profit at this kind of resistance level that's been kind of pushing down the market for the past couple times we have made a very extreme all-time high. And right off the bat, I can see a take profit of about $190 to $195 a share. I think that can recover within about 4 to 6 months from now, and that could be a very nice trade where you can cash in for a very nice, again, 26% of the upside. One other stock that I could say you could buy as soon as tomorrow is going to be Berkshire Hathaway. Berkshire Hathaway is one of the stocks that's been on my radar because it's one of the only contenders that really beat the S&P, beat the NASDAQ. So that being said, when I'm taking a look at Berkshire Hathaway and I see that we have a major break of our resistance line over here, and then we have another immediate break of our resistance line right over here, post-market is up higher than where we are closing at. I don't see any reason why Berkshire Hathaway, again, always makes new all-time highs. I don't see a reason why we can't make more all-time highs with this. Berkshire Hathaway has $400 billion that they have sitting in cash ready to invest. And as these stocks are starting to trend lower, we're getting a little bit of disconnect and a lot of market breadth. I don't see any reason why Berkshire Hathaway won't be pouring money into these undervalued stocks and have their price rise up to a new all-time high level. But Berkshire Hathaway right now, if you want to place this trade, you're looking to buy, again, right at 502 where we are currently. You have your stop loss right at our support level at 495 here. And then you can take profit at 536 or even a brand new all-time high of 559. I think this is going to be a very strong contender for take profit. And you're still looking at 11%, but this is like a very safe 11%. We also have a rising support level that's been holding us up for quite a while now, all the way back since 2022. And we have gotten almost a rejection off of it here. So that is kind of a good sign that, we have a lot of buyers in this area that are looking to move the price higher. And even if we don't hold this line here, you can still have an immediate stop loss that will prevent you from taking any further losses or even help you short the market if you were interested in shorting Berkshire Hathaway. But that is my outlook here. Buying Berkshire Hathaway, Intercontinental Exchange, Pepsi, and waiting for that TSM trade are going to be super crucial within your trading and helping you get those new portfolio all-time highs. But if you are interested in getting even more trades than this, getting every single trade that I take in real time, and learning how I beat the stock market by about 900% or a little bit more actually, I think, in 2025, come take a look at that link in my description, wap.com/TP-finance. But that's all for me today. Thank you very much for tuning in, and I hope you guys enjoyed, and I will see you in the next one. Take care, y'all.